What is cost classification under absorption and variable costing? Well, to start with, the idea is that whenever you produce a product, you need to understand the costs that go into it and to allocate those costs appropriately with regards to how the results of the transaction are documented and reported. So to start with, some cost allocations or classifications, if you will. One, cost of goods sold. That's everything that goes into, again, making the costs. And then there's your selling and general expense account. Two separate things. These are different income statement accounts where you would account for expenses that go into operations. Cost of goods sold, the expenses are all incorporated there into the product. Selling and general administrative expenses, a separate account. Again, that's an expense. Now, those are generally made up of your direct and indirect costs. Your direct costs are generally your material and labor. Your indirect costs are oftentimes fixed and variable overhead, the things that didn't go directly into the product itself. It was just necessarily incurred as part of the operational process, but these weren't inputted variables into producing the product. Now, absorption costing and variable costing are approaches to allocating these costs. So let's start with absorption costing to start with. As the name implies, the costs are absorbed into the product. More costs than otherwise, right? So as sales occur, the cost of inventory is transferred all to the costs of goods sold. Okay, so everything that goes into making the product, all the direct materials, all the direct labor, all the variable manufacturing overhead, that's the manufacturing overhead that changes as you produce the product, or fixed manufacturing overhead, that's some percentage of the total overhead that is allocated to that product, okay, is allocated there to cost of goods sold, okay? Anything that's not allocated to cost of goods sold is treated as a period expense for what we call SG&A, your selling, general, and administrative expenses. Okay, so under absorption costing, the majority of things are entered in under cost of goods sold. At the time of sales, this would be an expense against the revenue brought in, so your gross profit there would again be lower. Okay, now what about variable costing? Variable costing takes a little bit different tack. So as sales occur, your variable cost of inventory is transferred to the cost of goods sold. Your direct materials, your direct labor, and your variable manufacturing overhead. Notice that we left out fixed manufacturing overhead. That's the difference between with absorption costing. Well, your fixed manufacturing overhead is allocated towards selling and general administrative expenses. Okay, so it's put into a different account. Now, you're basically, in variable costing, you're just simply separating out that fixed overhead expense, something that doesn't change with production, and you're putting it into a different expense account. Now, what this does is it generally tends to overstate your gross profit, simply because what you're subtracting from your gross revenue, okay, is less because your cost of goods sold is lower. So, but your selling and general administrative expenses are higher. So once again, it comes down to how it appears for reporting purposes as to where you record those fixed overhead expenses. And that's how cost classification works and the difference between absorption and variable costing.